All right, we should be live. Welcome back to another live stream. It's TraderXO here once again. It's the 6th of November 2024. The time is shortly just after 9 p.m. UTC. If you can give me a quick confirmation in the chat that you can hear me okay and that you can see my screen. Happy November, happy Bitcoin all-time high, and happy election day. Yeah, I think there's a slight lag, but as long as you you give me some confirmation in the chat, we'll proceed. So as always, anything said in today's video is not financial advice. It is just my view of the market and my thoughts ahead on Bitcoin primarily. That's what the key focus will be. And as always, anything said in today's video is not financial advice. And finally, a special thank you to my partners, OK Exchange, where I work as a product partner and I've teamed up with them. So a big special thank you to them. Now, if you guys remember, I mentioned that there's a possibility that I may be launching a 4 to 5 week free service. So I'm just going to touch upon that now whilst we're here. So we will be going ahead with it. It's going to be on the 2nd of December, Monday. The 2nd of December is when I'm looking to start, and it will probably end on Sunday the 5th. Now, let's just get some things right. It's not a paid group. It's not a signal service. It's not a financial advice type of website. It's not a Discord or a Telegram chat group, okay? I'm not here to hold anybody's hand. What it is, it's in partnership with my exchange partners where proceeds will be given to charity. And I'll also be giving away some funded account giveaway prizes towards the year end or towards the end of the 4 or 5 week mentorship, okay? What you can expect, okay, is 2 to 3 streams or videos per week. So that's more of an in-depth insight into my mind, basically how I plan for the week ahead. I'll do my Sunday reviews, share that with you guys, what trades I'm looking at. Moving on to price action concepts, some order flow concepts as well, and how I actually, not looking to teach order flow or market profile, but how I incorporate that when it comes to trading Bitcoin. We'll then touch upon how I use that for trade execution. We'll discuss trade systematization, what a system should look like, what my systems look like in terms of some of the strategies that I trade that you guys can then go away and take if you wish to trade those. I don't have a problem with sharing those because I feel as though you can give your system to somebody, but at the end of the day, it all comes down to the mindset and emotions, okay? You can teach 30 people the exact same thing in a room to trade, but ultimately when it comes to pressing that button and how you manage your emotions, that's what it's going to come down to. So again, talking about trade planning and the actual trade life cycle, the steps that I go through from trade setup, organization, planning, preparation, execution, okay? And then from execution, management of the trade, what I'm constantly thinking about during the trade process, and then how I look to then close out the trades and reset mentally, manually, journal. Throughout that process, I'll also be talking about in December what changes I've made to my trading manual. So hopefully there's enough in that short 4 to 5 week process to give as much as I possibly can. I'd love to do it full time, but unfortunately I can't. I don't want to. I kind of, it's very difficult for me to commit to something like this, but I'm going to try it for 4 or 5 weeks. And like I said, hopefully for 2 to 3 sessions a week. Sometimes there'll be live streams. Sometimes there might be live traded sessions. Sometimes it'll just be recorded videos, such as a Sunday market outlook, an in-depth market outlook as to how I go about setting up for the week ahead, and yeah, just pretty much sharing all of that. So like I said, the only precondition is that if you are interested, then feel free to sign up using the referral link in the description of the video. Like I said, it doesn't cost anything, and the proceeds, I intend to give the proceeds either back into charity. I'll be doing some giveaways of those proceeds, and we'll figure out the rest. All right. So if you're interested, that's all you need to know. There's nothing to pay. There's nothing to sign up for. I think once you've signed up with the referral link, I will be launching a website in the next 2 to 3 weeks, which you will need an exchange user ID to sign up as part of that process. So that's the only part that you need to know. Apart from that, let's move on forward to today's stream, okay? Lost my voice and probably come down with a slight cold, but we'll get through. Right, so excuse me. Talking about Bitcoin, looking at this chart, where do you want me to start? You tell me in the chat. Where should I start? Looking at this. So, I mean, we can talk about everything that I've discussed over the last several weeks. It's played out fairly well. All the way back from when I started streaming again, which was early September. We were down here. I talked about the fact that I don't think we're just going to veer reverse in the next week or two, which was pretty much the case. We had a significant amount of range-bound price action, and it's now in November that we're finally getting the push higher. So the first things first, let's just keep it simple. Let's start off with the XO macro trend scanner. What does that tell us on a weekly basis? So if you follow the streams, I've talked about the fact that you want to see this being short-lived, which we got. You want to see price reclaim back above the bands and hold, which we've had. We should now expect to see continuation higher, okay? I'll talk about immediate levels later in the stream, but just from a high time frame contextual point of view, this is the weekly chart. We're looking at the weekly 1225 EMA, the bands, okay? And you can see the context is to the upside. We have not yet had a bear cross or a death cross to the downside. And that's one of the key reasons why I stuck to my bias that every time we've traded towards these lows, it's been a long opportunity, because I didn't see this shift in context. I also talked about the fact that, look, just because people are talking about a shift in market structure where you've got lower highs and lower lows, you've got to look at the overall context. This was not a trending market. This is a trending market. That's the first misconception and misunderstanding in terms of a contextual perspective that I saw shared across the timeline. You've got to look at the overall picture of price, okay? You don't spend 10, 12 weeks in a downtrend going sideways. It's a range. And in a range, you often have various structural shifts. The only structures that make sense within the range are on the lower time frames. But if you're looking at this on a daily or a weekly, then there's a lot of chop from a market structure perspective. And this is where you have to kind of be fluid to go with good buying opportunities. You have to trade at the extremes, okay? You're either covering at the range highs or hedging at the range highs, and you're looking to buy the range lows until you get a break of one side or the other of that given range, okay? The second point that I talked about was the monthly chart. If you look at this, look at the wicks, okay? What did I cover on the last stream and the streams prior to last week's stream? Look at the wicks. Selling is being absorbed. Buyers are stepping in aggressively. When you see that, you should look for it continuation higher, unless we start closing below these wicks again. Okay, so that's another show of strength in the market. Don't worry about the... sorry, I'm just looking at the chat. We'll come back to the questions later. Let me just go through the stream first, okay? We'll address any questions that you have. If you have any questions or any comments, please feel to leave a comment in the description after the video, and I'll address them in the next stream, okay? Now, looking at price currently, you can see that the monthly wicks demonstrate a significant buying. We're seeing that continuation higher. The big question is, okay, is this now all just going to be a deviation outside of the range high? I think, in all honesty, even if it is, right, in this context, now had this been 2021, you know, the old XO would have shorted this, because it wasn't just the fact that we're trading above all-time highs and it's time to get super bullish. If you look at the macro conditions at that time, we knew that the Fed was going to be tapering. We knew that there was going to be a rate hiking cycle. We knew that there was going to be a cutting cycle, that liquidity is likely to recede. In this instance, okay, those preconditions have not been met. We know that liquidity is fine, growth is fine, inflation is relatively modest. The question is, well, not the question, are we in a regime of reflation? Yes, we are. Are we likely to head into inflation or disinflation or recession anytime soon in the next 4 weeks? No, we're not. So you have to go with the current regime. And I'm looking at this thinking that, look, all right, we've got FOMC tomorrow. There's a good possibility Yeah, there's some very good bullish signs, and there is a possibility that people may start shorting this. But the one thing I've said is, all right, you may get this pullback back inside the range. People may classify this as a deviation. The first initial reaction is it's going to go lower. There's a deviation. But my argument, and just something to think about, I've seen this happen quite often where price trades above the range. Okay, it hovers around here, slowly drifts back inside. What happens is shorts pile in, and this is where you want to check the positioning. I'll talk about this in the next stream, but you'll see shorts opening. You'll see a shift in open interest. When you see shorts piling in, it won't take much for price to push these offside, cascading liquidations, and then you're going to get the big candle to the upside, because not only do you have shorts being liquidated, shorts closing out, being forced open longs, you're going to have longs piling in. And that's why, for me, in this instance, unless you're hedging against your spot position, if there is a break back inside the range and you don't mind getting stopped out on your hedge against spot, then fine. That's probably something that I may consider, but I'm looking to be aggressive if there is a pullback into this zone. And this is all we're going to get. Just a pullback into 67, 68, 69, and it starts pushing higher. There's a fairly decent chance we could see continuation higher over the coming weeks. Now, just bear in mind that there is FOMC tomorrow. I'm not sure what happens, whether we get some volatility, whether we get a shakeout of late longs piling in, and whether we get some profit taking and hedging, right? I don't know, but just some signs to look out for. Is that clear? I just want to understand if what I've tried to portray and explain from a positioning standpoint, from a price action standpoint, what to expect if we are to see price trading back within the range. It doesn't necessarily mean it's a deviation. It's not confirmed. We don't know whether it's confirmed. You can only play the probability, and if it breaks down further down, then yeah, you get the confirmation. But just be careful, again, if you're aggressively shorting this, that this isn't just a trap on shorts before we see prices go higher. At the end of the day, you are going against the momentum. You are going against the market structure, and you are essentially almost all but fading the first breakout of a range after, since March the 14th, 15th, we've taken out these highs. Every single high has been taken out now. So unless there's compelling reason for me to short this, I'm just being cautious. From an aggressive short, more from a hedge perspective would make sense to me against my spot, which my spot entries have been from down here. Now, in terms of going higher, if this truly is a bull market, which I'm quietly confident at this stage that we will likely, I'm hoping, or I'm playing towards a probability of going higher. Let's talk about mapping out the macro range now. This is a good example of how I use range extension points, and I'll also use some trend lines as a projection point where price could potentially trade up into. Now, if you understand the concepts of range trading, it doesn't matter what the time frame is, whether it's a 1 minute, 5 minute, 30 minute, 1 week chart. The concepts that I use around the key inflection points are always the same. The only difference being is that the time frame is higher. Now, you've got your range lows here. Let me just go into a 3-day chart. Taking the previous all-time high, this more or less defines my range lows, okay, with the deviation. Equally up at the range highs, that's my range highs there, okay? Taking the mid between the two puts me in around here. And this, the reason I'm doing this from scratch is just so that you understand how I'm mapping this out. Now, I take a range extension just as it is. Sorry, bear with me 1 second. Just as it is. I'll mark this out here. This range high, where we've had resistance, okay, price trading over the level, under the level, back over and holding. That 66K level is what I want to see hold as support if there is any pullback. The range extension to the upside now is giving me something around 115, 120. I haven't mapped this out exactly to point, but you kind of get the gist. How you wish to go ahead and do that is entirely up to you. Then we've got the mid-range point of the extension coming in at around 90k. These are the high time frame inflection points or high time frame levels that I'm using as price targets, pivotal points. Like in between there, and you've probably seen me do this, is do the range quarters as well. Got one at around about 80k, and then the other one is probably somewhere around about here, 100, 102, 103, okay? You can map it out precisely however you wish. And the same would have been on the opposing end down here, where we had the range quarter, which was acting as a key pivotal level for me. Okay, just around about there, give or take. And that was confluent with this demand zone that we had here. Okay, this was the level that I was insistent that for as long as price is below, is above the yearly mid level, this was our yearly low, this was our yearly high, this was our yearly mid level. I'm just going to mark that out in blue. Now, in terms of context, let me just do this as a solid line. Okay, there's our projected range highs. It's just a projection. It's not a certainty. This now becomes our mid-range. This becomes the high time frame range quarter. And this is all I'm focusing on now over the coming weeks. So instantaneously looking at this, I want to see this level hold as support. And I think when you look at this objectively, when you zoom out of price, I've got no real concerns. I would welcome a pullback to go long on futures. Anything anywhere into the previous highs. Not the best line I've drawn, but you kind of get the gist. Anywhere into 70, 71, 72, 68, I'd be looking for that continuation high. First objective, 80k. Second objective, 90k over the coming weeks and months, okay? Where I would be concerned is if there is a break, not only of this level, but acceptance below it, and therefore a break in this trend line. I'm not looking at anything else, just pure price action, structure. If there is a break of this, that then becomes a slightly bigger problem, and therefore we are still back within that range, perhaps deeper than I would like. So that's the one scenario that I don't want to see if my expectation is for prices to go higher. I don't mind a shallow pullback, bullish, looking for longs, break below there and the trend line and get back under 66. Slight cause of concern. I may be forced to start hedging out or taking profit on some of my spot positioning that I've built up over the last several months. Is that clear? Now, it's objective which swing points you want to take. For me, I want to use the candle body close on the 3-day. This level here, okay? Not this. This is historical context. This was the last relevant swing high before we had price trading above and under. If you look at the monthly, you can see how clean this level has been, right? We traded above it for a month. We closed above it, and then we closed straight back under. And look where we rejected. Rejection, and again, pushed above it, retest that level. This is why it's key for me. This 66, 67, refine it yourselves in terms of the precision points, but you should understand the context that I'm trying to share with you, why this is now the key level that I want to see hold. I don't mind a retest, a shallow pullback, maybe after FOMC, and then continuation higher. The other factor is that we are now above November's monthly open. So another reason that if there is a pullback into this level and it reclaims back above, that's another factor of confidence to look for longs. Any questions with regards to that? And if it was fairly bearish, or if there was concern of price going lower down, then the other question you want to be asking yourself is, how much time does price spend above the previous all-time highs? If it's not being instantly rejected and it just hovers here and there's no continuation and there's a lot of stale longs opening here, they may get squeezed out, flushed out, and then we may see continuation high. What do you do in the scenario where it doesn't give you the pullback? What do you do if this is the break out of the range? The way I play it, tough shit. You should have got into position last week, or you should have got into position. I shared my charts on the stream, on the timeline last week. I think I updated it yesterday. The pullback into this level here. In a bull market, when you see strength in the market, you'll never get a sweep of these lows most of the time. What you will find is price gets very, very close to these swing points, but it respects it in terms of, let me just do this again. In terms of respecting price, respecting swing points, okay? If you look at this low here. Did we ever take this out? No. Came very close, but didn't take it out. Same again, price pushes higher. Did we take this swing out? No. Comes very close, continuation higher. Retraces into a fairly significant level. Did we take this swing out? No, we didn't. Continues for, again higher. This is indicative of something that you'll often see when the market is showing strength. You never get those clean swing fails that you may be used to in a range-bound environment like this. Give you a clear signal. You've got to be slightly more aggressive in this instance. And it's certainly the case when you have a trend in market. Okay, when you have a trend in market and there's compression before continuation, you'll see, again, very similar structures. When it's bullish, we've taken out these lows. Look at this. Swing low, swing low, swing low, swing low. Look how close it gets to taking price out, but it can't. And when you see this type of structure happening and forming, the minute it goes above, it's time to take off, all right? And you get the fast moves up. So this type of compression is a bullish structure, and then you get the breakout. So again, the question is now, are we likely to see this on Bitcoin over the coming days or weeks? Just a little bit edgy with regards to FOMC tomorrow. But again, if there is any pullbacks, then I suspect they won't be very deep. Maybe that's the best we're going to get before continuation higher. I'm wrong. If we break below 66, then I'll have to reassess. And that's just the nature of trading. I don't know. I don't hold a crystal ball. I couldn't tell you, but I'm leaning with the probability that we will see trend continuation out of this 6-7 month range. And I want to flow with the trend until proven otherwise. And I have to shift my contextual bias. Yes, I look at moving averages. If you look at the EXO trend scanner, even on the daily, this looks great. So even the dailies are coming in at 69, 70k. So even if there is a pullback, let's just assume there is a pullback. I'm not saying it's guaranteed. It may not even happen. We may just get a shallow pullback into the previous all-time highs before we see continuation higher, right? But even from a moving average perspective, this has not flipped bearish once in the context of the 12-25 EMAs on the daily. And that's all I'm looking to do objectively, working price on futures with my spot from one zone to the next, from one level to the next, okay? Where I may be looking to take profit on my futures trade. If we see something like this, then I may look to cash some off, okay? Or I may look to hedge my spot. If I get the over and the back under, and there's a shallow pullback, and whether it reclaims, then I'm looking for trend continuation higher. So the only time that I'd be looking to short is not because I'm outright shorting the market. It's because I want to have some cover and lock in the gains that I've made on my spot position that I've rebought back in at here. Looking for those hedges. That's just personally how I'm looking to play it. You don't have to play it that way. If you believe Bitcoin's going to go significantly higher to 90, 100, 120k, then you do what's best for you. I'm just talking about, at the end of the day, I want to lock in the gain whilst maintaining my exposure. This is possibly, not that I am, it depends on the price action, how price action develops. Just one of the ways I'm looking to lock in those gains. I'm being fluid, and if price is going to show me continuation higher, then I'll happily cut the short and let price continue higher. If there's a deeper pullback, guess what? I'm now going to look for longs With my spot holdings, I'm going to look for longs on perps and look for continuation higher. So it just gives me that flexibility of trading the market, locking in gains. It is a slightly busy style, but look, at the end of the day, I don't have to repeat myself. You know, in terms of trading Bitcoin, I have made far greater gains, right? Trading this range and trading this range over the last 6 months, which many setups that I've shared on stream, on the timeline, from a long perspective, several times I've longed this 50, 58, 55, 52 zone up into the 68, 70, several times. The gains that I've made in here have exceeded me simply buying spot and holding it all the way up here. Prices are nothing for 7 months. So a range for me is one of my favorite environments that I enjoy trading. We had that range down from 18 to 25, 25 to 30. There were trades to be had back and forth. Okay. Same again here. Now, if we are shifting context, this is where I'll probably stop, reduce the number of trades that I take. And if we are in a trending environment, then I want to flow with the trend to the upside. So again, if this is now to be a trending environment over the coming weeks, I don't want to get chopped up trading this aggressively. I just want to look for those significant pullbacks if there are any. And in a bull market, in a trending market, if there's anything that you should know is that pullbacks are very shallow. You're never going to get the perfect pullback. And number two, you have to be slightly aggressive with a very good invalidation level before you see continuation higher. And you will get these aggressive flushes to the downside as well. When they do happen, they're very fast and they show strength and continuation higher. You've only got to backtest previous rallies and look at how price, when it breaks above range, the moves can be aggressive, the pullbacks can be shallow, rally, consolidation, rally, and then you get this fast sell-off before you see continuation higher. It really doesn't waste time. You'll see signs of that by the wicks of buyers stepping in, these kind of lows being respected, and then continuation higher. It's very, very short-lived in terms of consolidation, and then you get the continuation higher. You're not going to get one of these long, drawn-out bases. This is after a significant sell-off. You're looking for trend continuation higher. And if you really want to keep it simple and flow with the trend of price, then delete everything. One of my other favorite moving averages is a 21 weekly EMA. You want to see the trajectory of this start turning up, okay? And for as long as price is above this level, I'm not particularly concerned. That's kind of the formation that I want to see on the moving averages to go higher. Let's look at the stocks. Weekly, this is fine. Like I said, in a trending environment, what you will often find is that don't pay attention, right? Don't let the stocks or the oscillators be your primary focus. So rule number one, in a trending market, oscillators can remain oversold or overbought longer than you can possibly anticipate. It's really not ideal to try to catch tops or bottoms when you see oscillators overextended in a trending market. In a range-bound market, that's fine. Completely different environment contextually, but in a trend, be careful. So the weekly is fine, okay? It could still oscillate at the highs for several weeks, something you have to look out for whilst price continues trending higher, okay? You saw that here. It reached the highs in November 20, went sideways for 3-4 months, and this is where price ended up. You got the, when you have indications of a very strong bullish market, look at the oscillator curling down, and yet price is going higher. All right, so just some subtleties to be aware of in that respect. Then when you look at the MACD on the weekly basis, What's this here for the first time? We've been range bound for so many months. What's happening here? You can see the dissipation of the momentum to the downside, and then the dissipation of momentum to the upside, and now you finally got the cross on the MACD. This is not an environment where immediately what I want to be thinking about, oh, let me see where I can short. It's completely different contextual environment compared to where we were when I was shorting this after several weeks of distribution, and then the fact that we had a swing fail and a deviation with a backdrop of bearish sentiment, with the MACD that had already crossed bullish and now was curling round, with the stock RSI at the cycle highs on the tail side. That was where I got out the market. Okay, 60. Well, I got out before actually. I sold on the way up, but this is where I shifted context. And for those who have followed me for the last 4 years, was where I became bearish. Okay, redistribution, continuation higher, lower. Sorry, not higher. Redistribution, continuation lower. In this instance, trend up, reaccumulation, looking for trend higher. Trend down, redistribution, trend down into base, trend up, reaccumulation, trend up before we see some form of a top forming, possibly, I don't know when. I'm not even going to discuss that right now. And then you've got the RSI. Let's look at the RSI on the weekly. So notice that I'm paying attention, first of all, to the higher time frames. Look at the RSI. And we covered this a few weeks ago, that as long as the RSI stays above 50, and we are starting to print higher highs and higher lows again in terms of a shift in context, the fact that we had 1, 2, 3 attempts to break below this demand zone and we couldn't. The assumption then has to be price is likely to oscillate to the highs again, which it has. And there's not been any harsh rejection just yet. And the RSI is above the 50 level. And it spent several weeks or months consolidating at these key points. So everything I look at on the chart tells me that the probability is continuation to the upside, barring any pullbacks. Where I'm happy to shift my bias is if I see a change in structure, if I see 66K breakdown, then I have to accept that there's every possibility that we're likely to trade back inside the range, which I hope we don't, because we've been there for 6-7 months. And we'll just have to play the range-bound environment until we get a break out of either side of the range. Okay? So apart from that, in terms of technical levels, there's really not much else I can give in terms of Bitcoin other than the levels I've defined based upon the high time frame context that I've mapped out earlier with the range extension points. The other aspect which I was supposed to cover with, look, again, this isn't really technical analysis. I don't think I can derive much from this. It's just a meme line. But look, if there is a possible trajectory, then I often use double trend lines where I have one against the candle bodies of price, and then the other for the kind of like the wicks. So again, just something that I've developed myself over the years as a projection. When I look at this and I think, you know what, considering where the range was that I marked out, okay, let's just assume that's one range point there. Are we likely to see Bitcoin push up into here somewhere, 100K, and then come back down again? Then what? You got to be prepared for this. What if it does this? And you're getting euphoric and carried away when you could have used this pivotal range extension to think, oh, you know what? Maybe it's a good point to get out of the market or take some profit if we get this over and under of this range extension here into this trend line. Then what? So again, I don't know whether it's going to happen, but it's good to have the foresight where if Bitcoin does trade significantly higher, where do you want to pay yourself? At what price are you looking to take some off the table? Or are you just are you happy holding this for the next 10 years? Fine. You can hold a portion. You can sell it all. You can just log off and come back in 10 years' time. No problem. But, you know, for those of us who wish to trade or lock in some of the gains, you'd have to sell your Bitcoin. I probably won't at this point. I'll probably be looking to hedge my spot exposure if this scenario occurs. And we could potentially trade back into this 67K level 3 to 6 months' time. I don't know. I just don't know. I couldn't tell you. I only know as much as you guys do where price is heading or where price could potentially go. I don't have a crystal ball. I can only look to react at the chart, you know, what the inflection points are. And then just every day my decision on my mind will change because as new data is printed and available, my reasoning and my thought process will change on a daily basis. So it doesn't matter what the fuck I said 2, 3, 4 weeks ago. All that matters is what is happening now and what could potentially happen tomorrow. And what am I looking to do in terms of playing the markets, in terms of taking profit, in terms of hedging out, in terms of taking on further risk. And all I try to do on these streams, you know, I don't go into the widths of order flow trading or market profile or deltas or this or that, the other, or order flow footprints. Everything I do, 90% of what I do is price action first. Whatever I do after that is for trade execution only. But I have to get my context right. And I won't always get it right, okay? I sometimes can be over defensive. Sometimes I can be very aggressive. But I'm just doing what I feel is right for me and my portfolio. You guys have to figure out what is right for your risk tolerance and whether it's life-changing money or whether you're still in the early stages of your trading career or whether you're trying to accumulate more Bitcoin or whether you believe in the long-term objective of Bitcoin and you want to hold spot for the next 10 years. So you've just got to get the balance right between what is your trading portfolio and what is your long-term investment portfolio. But yeah, look, like I said, this looks brilliant. I think there's no doubt in my mind that, you know, I'm not concerned about anything. I've been contextually bullish for the last several months. I've been adamant and openly clear about looking for longs, buying the longs. This isn't distributive. I know there was comparisons being made by various voices that it's very similar to what we had in April, May 2021. Not really, you know, and thankfully the macro conditions have been favorable in terms of Bitcoin going higher. And so I don't have any concerns. Let's move on to Ethereum. Again, what did I talk about when price, I think Maureen, you remember this, don't you? When Bitcoin, when Ethereum was around about here, wasn't it? What was the one thing that we said on stream that is Ethereum structurally, when you look at this, do you really think this is ready to take off and go higher? No. We talked about the fact that really you want to see a base-like environment, okay, before you see a shift in context and continuation higher. We got that formation. We had a low, a high low, another high low, another high low. And again, very similar to what I talked about a few moments ago on Bitcoin in terms of bullish price action is structure. We saw the bearish calls come out. Ethereum looks like shit when it was trading lower down. But again, subtle signs of price action. Low. Significant higher low. Series of higher lows. Higher low. Another higher low. Very quick swing fail, but respected structure here into this demand zone. What was the need to go bearish? The fact that we had a reclaim back above the mid-level after 3 months of price action, August, September, October, and the first thing people think about, oh shit, let's turn bearish right into the mid-level, when the majority of structure was respected. And it was most likely positioning or hedging into the elections, right? Well, whoever's positioned or hedged short has to be forced to close out their shorts and longs piling in, and that's why you get these aggressive moves to the upside. People are now chasing the Trump trade. Shorts are getting out their position. So I think we will see a recalibration of price at some point. Maybe after tomorrow's FOMC, things will become clearer into the weekend. But again, the way I'm looking at it, you've had 1, 2, 3, 4, 5, 6 tests of resistance. At what point does this give a shallow pullback before it takes off? And my target on my Ethereum spot buys is at least, well, I'm not going to say at least. Objectively, I'm looking for 3,500, and after that, we'll see. But my entries have been from here and here and here. My average price is something like 22, 20, I think it's 23s, low 23s. And if it pulls back, I'm happy with my positioning. But again, when you look at this on the higher time frame, zoom out, look at the daily, look at the weekly. We've had pretty much the perfect pullback into the previous range highs, okay? If this was the base consolidation that we had for nearly 1.5, 2 years, this zone here, okay, is your range. This is your wick-off show of strength, if that's what you want to call it. Price rallies, retest that range there. This was probably what some of the best buying opportunities one could ask for in terms of positioning. Now, to go back to these highs. So in terms of the range that I'm looking to play on Ethereum is very simple. This is my range high. I'll do this in blue. And this is my significant range lows here. Why are people getting bearish into support? We rallied significantly from 2,300 to nearly 4,000. We've had a 40-50% pullback. Get your ass out of the lower time frames. Get your head out of the lower time frames and look at the big picture ahead of you. In terms of risk to reward, and I say to this on the timeline, in terms of the risk to reward ahead of you or ahead of us, I'm looking for longs with a clear invalidation below 2,000. Unless there's a swing fail that occurred and price got back inside, fine. I'll take the loss. I'll jump back in. I'm looking for price to go to continue higher. So again, I just don't understand why there's so much bearish sentiment. Price takes time to build these base-like structures, and the longer the base, the bigger the base, the more probability that we could see price continue higher. So that's what I'm looking at. And again, when you look at the bands here, on the 3-day, we are starting to get that compression. This is what I'd like to see. Eventually, I want to see the crossover, and you know what happens when we get the crossover? You've got a bear signal. Eventually, you get a bull signal, and you see that shift in momentum trend, or what I hope is trend to the upside, at least into that 3,500 level, okay? Objective, ideally, would be 4,000. If you go to the weekly, I think there's still a bit more work to be done in the weekly time frame. It's not too bad, but you can see that the bands are starting to lose that trajectory to the downside. It still needs a little bit more work, but on the daily, I think what you've got to be looking for here, remember what I talked about in the previous stream, where you get bull, bear, and then you're going to get the bull signal. And if the key thing to note is look at the time that we've been red, shallow period of green, or short period of green, significant contextual of red, or bearish sentiment, not bearish sentiment, I should say, bearish price action according to the 12 and the 25 daily. You finally get that shift into green. Shallow period of red, slightly longer period of green, and this looks likely to be another shallow period of red. The minute I see the bull signal, I think it's continuation higher, okay? Into 3,500. So this is the zone that I'm looking to play. Range lows, 25th percentile of the lows, to the upper bounds, 25th percentile of the upper bound with a mid-range. Is that clear on Ethereum? Now, if I'm bullish on Ethereum, then clearly I have to be bullish on altcoins as well. Looking at total 2 and total 3. Let's go to the 3-day chart. I generally like to use the 3-day chart because it really gives me a clear picture of price. Again, very similar story. We've pulled back into the yearly open level. There's a yearly open on total 2. Buyers are stepping into the market. Let me go to the 5-day chart. We're breaking above the trend line, or close to, however you want to map it out. This to me looks like possible or probable reasoning for trend continuation higher. I could be wrong, but the way I've positioned is I'm looking towards trend continuation higher. When I look at the weekly chart, look at the stock. There's room to go to the upside still. On the daily, there's room to go to the upside. On the 3-day, doesn't give me much, but this is a significant trend down. This is a significant trend down with redistribution, continuation lower. This has been a slow drift, gradual bleed down, and now we're starting to see the rounding out of price from a structural perspective. So again, the main focus that I'm trying to apply here is just look at the structure of price. This isn't an aggressive trending down market. It has been a painful, slow bleed for many, I understand. But at the same time, it also presents great opportunity on many altcoins to get exposure to the upside. Okay, so that's total 2. And then we can look at total 3. Again, when you look at total 3, we've got this compression. Let me just get rid of the bands for a minute. So the way, there's so many ways you can do this, but look, ultimately, keeping it very, very simple, compression under the mid-level. We've also got compression in terms of this here. So how many more pullbacks are we going to get before this blast through? At least into here, and then this, and then this. That's the direction that I'm looking to go in. Give me a higher high, higher low, continuation higher. So again, I don't really have any concerns. I think we've been presented with some excellent buying opportunities, August, September, October. Again, as per the streams, I've been advocating for the fact that we are getting some really good setups on altcoins. You want to start to think about positioning into altcoins. I've talked about on various streams how I position into spot positions and how I trade perps or futures on altcoins. Can anybody remember what I said? When I position into spot or when I position into futures or perps? I position into spot prices, okay, or spot allocations when we make these types of structural lows here, right? When you see this type of price action, this is where I pick up spot. I'll hedge at the highs. Where I'm looking to play the momentum from a futures perspective is when you have price, okay, 4 stages of a market cycle. This is your distribution. Price trends down. You get your low, you get your high. You get your low, it holds. Or it swing fails, gets back inside. This is where I look to buy spot once the range has been established. Pick price rallies, pulls back, add to spot. Price rally, and it could take 2, 3, 4, 5, 6 months. Where I look to position into futures is when you essentially have, like I've called it in previous streams, the tail side of accumulation. This is when I start playing perps. When the momentum shifts quickly to the upside, you've got all this inefficiency here, which we haven't traded on the way back up yet. We've built the base. If this is a bullish market, I want to start looking for longs on the tail side. These moves are very, very quick to the upside. I've got my spot doing most of the legwork, and I'm looking to max out on futures. Not max leverage, but go aggressive with the flow and the momentum to the upside. Maximum amount of gains, least amount of time. I'm in and I'm out. Matter of days, matter of weeks, 2 weeks, I'm done. This is where I floor it on futures, okay? And you can use the bands on here as well to go with that momentum. If you look at this, we're on the daily time frame here. Are the bands screaming momentum to the upside? Look at the trajectory of the bands first of all. We have been in a range-bound environment. This is not a trending market just yet. What does a trending market look like? This is a trending market. This is where I want to play leverage. This is where I'm looking for continuation higher. When I see these aggressive flushes or shallow pullbacks, I want to flow with the momentum. I don't want to short this. I want to only short the market or get out of the market when I see distribution tops like this. Look at the trajectory of the moving averages. The MAs have gone from aggressive trajectory gradient to the upside. Price is now range bound. This is where I stop playing leverage. I start thinking about positioning or taking profits. I think about risk to the downside, and I latch onto shorting to the downside again. And I gave you an example. If you look at this now, this is still very choppy. If you're playing perps, there's a good chance if you're not shit hot at trading, you'll have got chopped up, 100%. And then you look at altcoins like Sui, right, where people are still trying to short this. What success have you had shorting this when you could simply use a simple strategy such as a 1225 EMA band to tell you, don't short. All right, if you had exposure to this, then fine. You could have hedged at the highs here. You've got a good enough reason for a swing fail and get back inside. There's the consolidation under resistance, and you get the breakdown. Fine, you can hedge out your position. But again, anybody who's shorted this, they've got wiped the fuck out in a matter of 2 days. All this build up of short positioning, what happened? One candle is all it took. Is it distributive? It can't be confirmed yet, because whilst we are in a range, okay, and this is something that you should really pay attention to. Do you really think that price is going to come all the way up here and then just come all the way back down like that? Unless it's an absolute shitcoin. Probably, could do. But in this instance, these are the types of environments that you want to identify. Is this a range? And secondly, what is the overall market context telling me? Is there a likelihood that this is distribution and the moving averages get chopped up? And if you lose structure, then yes, there's a good chance of shorting the market back down. But in this instance, is this all just compression? Okay, where you get this clearance thrust type of pattern. This is your clearance thrust. Above here, you're going to get a trend continuation higher. Classic price action pattern that I've covered on streams before, where you see the emergence of a clearance thrust. Same on Solana. I've been talking about it for weeks and weeks and weeks on the timeline now. Is that when you look at Solana, let me see if I can bring up another chart just to demonstrate the thought process. If you go to the weekly, again, higher time frame context, or even the 3-day, there's every possibility that this evolves, okay, into a clearance thrust, or whatever you want to call it, okay? And whilst many were advocating for distribution, Solana's going to go back down to $70, $60, I've held my views on this very strong, that 120 was for buying, okay, rebuying back into Solana. At this point, I'm looking for, if there is a pullback, doesn't have to be. I think once we clear these highs, it's going to be all-time highs. This is a very, very good bullish continuation pattern building. Okay, as long as structure holds, I'm looking for these highs to get taken out. We'll see what happens after that. Does that help? Right, just give me 1 second. So you get this heavy buildup of base. Let me just zoom. Heavy base buildup showing resilient buyers, sellers on clean bottom or top with a large number of rejections. Okay. We've had some significant rejections at the highs, but in terms of the base, buyers stepping into the market every single time. Okay, it's not breaking down. It's not breaking structure. We haven't had acceptance below 120. And then you get the clearance thrust where sellers become exhausted. You're going to get the continuation higher. First objective is this. And then hopefully, new all-time highs. Price is fractal. Ignore the time frame, but you kind of get the gist. Okay, so you have compression, multiple touches of the trend line, and then you're going to get that continuation high. I think those of you who used to watch my streams in 2020, 2021, it's pretty much how we traded Luna from $30 to 110, and then we shorted it on the way back down. That was amazing. That was some fun times in Luna. What about Solana's inflation? Doesn't really matter. I just look at the price. I honestly don't look at fundamentals or inflation. Talk to me about inflation on the way back down in the bear market and I'll be your biggest fan. But in a bull market, it doesn't matter about supply or inflation. It's all about the marginal buyer, okay? Who's going to be... Look at supply, look at demand, look at price action, look at the context. Understand what you're looking at ahead of you. Forget, the aspects of inflation. We're in a bull market. It's... Until we're not in a bull market, then I'll say, yep, tell me more about this inflation metric. And is this thesis going to serve my shorts really well to the downside? Let me just have a look at some of the questions here. If there's any questions, please do let me know in the chat. Now's your chance. And I'll probably wrap up the stream in about 10, 15, 20 minutes. But yeah, 2024 has been good. I've been bullish, openly throughout 2024. I've been looking for very good buying opportunities. I've been very patient to reposition into altcoins. I think there's some altcoin structures that I really like WUSDT. I think I picked some up today at 21, 22 cents. Okay. The last time I traded this was from 21 to just under 40 cents. Captured more or less a 100% gain almost. Hedged out. And then just sacked off the position when I saw the structure break. And I consider myself very fortunate to be buying back at these high time frame macro lows. This was August. I couldn't ask for anything better. Even if it does dip back into, let's just say 18 cents, 19 cents, that's fairly good enough for me. Very clear invalidation at these lows here. So I'm thinking high time frame, like in the next month or two. Probabilistic, or how I'm looking to play this, is that if the markets are going to go higher, then I think this goes to 45 cents. It's a nice trade, okay? It's not life-changing, but it's a good trade. Other structures, let me think of... I think this is a really good structure to look at. So I talked about ZIG. When you see price rounding out like this, tapping this demand zone, you get a good reaction off of it. This has been range bound for 6-7 months. And if you look at GOAT, I pretty much nailed this trade. We're very happy with my GOAT trade, still in position. It was, who remembers this? I think I shared it on the timeline as well before it even happened. It was practically this. I think I had something like this. This level here. Price is round about here. And what I had planned was to be buying in at that 20 cents, 15 cents level. This is what I thought would happen. I think it's from... Yeah, if you got my timeline around about the 20th of October, this is what I had. This is what I initially had. Because you get this like rounded structure and it just springs really hard and aggressive. It's a beautiful structure to observe and watch for. It's happened on one of the coins that SC trades, which is FWOG, FWOG. And then you get that continuation higher. All right. So again, if I just look at the other one, which was again, just I'm talking about structure here. I think we saw something similar happen on this as well. There you go. So look at this. You see price. Ignore the time aspect. Just look at the structure. That's all I want you to focus on. Is when you look at the structure here, and you see price come back, clean out these lows here. You get the aggressive move to the upside. So that's gone from 15 to 28 cents, nearly 30 cents, probably more. Oh, fucking hell, it has, yeah. Oops, my language, but I had the replay button on. Once it springs, it really does take off. Not bad. Not bad at all. Let me look at Tau. Tau is an interesting one. So Tau was one that I got wrong. Initially on Tau, I had, what did I have? Yes. So this is what I had on Tau. I shared this structure here that, yeah, I remember doing this. I want to see price come into this level and trade back up into here, right? I think I shared this on, it was around about the 24th or 25th. Right, that for me was it. This was it. I bought some Tau here. And I said that, all right, fine. I'm not sure what happens next, but I'm positioned here. If I get a rounded retest, I'm looking to trade this into this level here. And I don't think that happened. Let me have a look. I didn't get the long trigger to go. Well, I didn't get to a chance to add to my long. And it fell short of my target. And then the market broke down. Okay, so now this is what I had on my own personal chart. That, right, fine. If we're going to break below here, what's the next objective demand zone that I'm looking at? It's this here. And is this all going to be a deviation under this level? Because if it is, this is where I've got back in, or this is where I want to get back in. Above here. Or I can be aggressive. Look to take a position here with a stop below here. Okay, does that make sense? Position here, once we get the retest of this level and it holds, pushes away, I can start positioning here, stop here, anticipating that this is all going to be a deviation under this level, and if it gets back inside, I can add more. First target, second target, and then third target over here. Right, so this is the context that I think about ahead of time when I'm looking to execute the trade. Now that you've understood the thought process from a simplistic point of view, right, we're tagging the demand zone. As long as this holds now, I took a position over here, okay? When it starts pushing away. Right, we've pushed down, held the level. I said stop below this low here. Held my stop. It's still respecting the level. And I'm, okay, still not stopped out, hypothetically. In this instance, I let the trade breathe. I gave room for the trade to breathe because I'm only 1/3 filled, and I want to add to my position at this point. So I'm still not too concerned. The fact that I haven't gone in full size, okay, helps me have a little bit more conviction that I'm not just going to puke my position and get shaken out by this. I didn't see acceptance below this level here. I saw a wick into it, another wick. We swing failed this low here. So at this point, I'm thinking, fine, we've had 2 chances now to break down this level. It's the 5th of November. And it was yesterday that I tweeted that altcoins have sold off fairly significantly. I'm looking at opportunity, and I'm thinking about, and personally, I'm thinking about scaling in, buying into altcoins again. Starts pushing up, added to my position. This now looks more, again, at this point, let's just assume we don't know what happens next. At this point, this looks now more akin to me that there's a decent chance, it hasn't confirmed. I'm just trying to explain my thought process here. That was this just a shakeout? Was this just a deviation below this level here? And this was the demand zone to buy? And what will give me that confirmation? I've been executing for this. What people teach you is wait for the deviation, then get back inside. I don't personally do that. I want to trade at the deviation. I'm anticipating this being a deviation. As long as the lows are as long as this low holds here, I want to be aggressive because there's my stop, there's my entry. Okay, and I'm look at my risk to reward now all of a sudden, as opposed to waiting for a bigger deviation. Then my risk to reward isn't as high. I'm probably playing the probability of being right, but I want to be aggressive in this nature. There we go. Break back inside. When it pops inside, very rarely do you get the perfect pullback again, but you see continuation higher. Okay, so that's kind of the thought process. In a bullish market context, you get this deep pullback, short-lived deviation. This is generally, because I've got a demand zone here, this is where I'm then looking to do business. I was wrong here, took the loss, repositioned here. Let's go again, okay? So I managed to get 2/3 of my position on this. Well, I just explained like why it's difficult to get in on a retest. What retest was done on 1 hour? You literally have to be chasing price. And sometimes it's about understanding the context. See, look, I'll show you something else that I could have done. Again, this is about low time frame execution that I'll cover in the 4-week session that I'll be running. Is that despite the fact that I'm talking about the higher time frame here, if I clean all this up, let me show you what I normally do on the lower time frame. And this is how you can execute on the lower time frame. If you understand the higher time frame context, you can look for opportunities for execution on the lower time frame. Now, can anybody guess what I'm going to show you next? For those of you who watch my streams over the years, you should understand what I'm going to touch upon next. Any ideas? Anybody? What would I do? I'm waiting for somebody to tell me in the audience. What would I normally do in this instance when I'm looking for trade execution? 3 steps. Somebody tell me where it is, please. Right. You're all going to say, oh, because of this SFP. Possibly, but not only. Yeah, low time frame range. Now, okay, right, you've got the first part right, low time frame range. Where is that range going to come from? What's going to define the range? Yeah, but where am I going to mark the range out from? I'm talking about low time frame range. Right, saying high time frame narrative. Right. Crypto hero, yep, the candle that caused the move. Okay. Right, watch this. What is this here? What is this here? The fact that this failed to hold, I talked about this being the next demand zone, the 4-hour demand zone, okay? Now watch. Range low, range high. Where's my range high? This point here, okay? When I go to the 1-hour chart, just imagine you don't know what time frame this is. Even on a 15-minute chart, let's just go across the line. You don't know what time frame is. Just imagine this is a daily chart. You'd be thinking, yeah, we've been here for about a good 20, 30 days, all right? Ignore the time frame. This is the range that I've defined, okay? Historical context. Taking the mid of this is where it's here, okay? That's my mid-level. That's my range high. And this is on a 4-hour demand zone. This is how I nail my entries. And this is just pure price action on an altcoin with the context of Bitcoin. If this is my mid-range, and I map out my range quarters on this 4-hour demand zone, and try it, backtest it, you'll see how you can really refine your entries. And this is just half of what I do, what I'm talking about today. I'll go into much finer details on the free private sessions that I'm going to do for the next in December. So look, contextually, just like how I would normally play a range. Extremities, okay? Range high, range low, mid-range for confluence. I know I'm looking to execute the trade. So in theory, if price is going to come down, where am I looking to execute? I'm looking to execute in the lower bound of the range. If price trades below it like this, I'm out. If it gets back inside, I'm back in again. If it's just a swing fail of a previous low and it gets acceptance back inside, I'm fine, okay? But the invalidation that I marked out on the 4 hour was this low here. So instantaneously, this is one zone that I'm looking to do my business in, between 395 and that 405 zone, okay? What I'd like to see is price come into the level, okay? Push away. I don't mind another retest or under this and back above. Get back above this mate. My stops here. This is where I've been scaling in. Pushes up again. I'll add some more. So this whole zone between 420 and 395 is where I'm looking to do my business. Let me just quickly bring it across the line. That's the 15th, so we've got some time to go yet. All right, we're getting close. I'm going to put on the replay tool at this point. At this point here, okay? Let's talk about it. Trade execution. Let me get rid of this and this. And the second thing that I want to do is, if I just got my high time frame level, okay, this was the other this was the other range that I had defined. So we'll just mark this as this zone here. Okay, it was blue. Price is coming into this zone now. You're looking at this, all right, we've taken out these lows here. At this point, I'm thinking acceptance back above, I can probably get in above this block, okay? If it trades here, then I've got to look to do business here. I've got to take the loss at this point. My entry was here. I've taken the loss. I'm looking to get back in lower down. Is that much clear before we talk about going into the finer aspects of trade execution? Let's now go on to the 50-minute chart. Normally, I'd be looking at the 5-minute chart, but for the sake of speeding things up, we'll just focus on the 15-minute chart. Let's run this forward. Still neither here nor there, okay? Now we're pushing in. Now I've got my alerts going off because at this point I've set an alert to give me notification when price trades under 430. Now I want to get to my desk and start thinking, if I'm away from it, to start thinking about trade execution. Very simple. 3 zones. This trigger, or this trigger, or this trigger, okay? 1/3, 1/3, or 1/3, wherever. 2/3 above here if we've had something like this and back inside, or something like this, shift in structure, and again, then I'll add, okay? So these two types of structures. Let's run it forward. What do we get? We're in the lower bound of the range between 390 and 410. I'm starting to add to my position here. Okay. Back at the range highs. It's going to be choppy. It's not going to be easy. You think you've nailed the bottom, but price could always come back down and take out this previous low here. Now that we're holding above this mid range high, but we're still below this level here. So we're not out of the woods yet, okay? We're not out of the woods yet. We're still contained between this point here and this resistance zone here. But I'm looking to build a position in the hope that somewhere along the lines, this forms a deviation, okay? That's my thought process. I'm looking to execute on the actual deviation with the fact that we've got a 4-hour demand zone here. Below there, I'm fucked. I have to get out of the market. Let's run it forward. No problem. I'm not going to get shaken out. I know where my invalidation is. We've just taken out this swing low here. Let me get rid of the red squiggles, right? So I can explain my thought process here. When you look at price, just focus on the 4-hour demand zone range that I've mapped out. We've swing failed this. We're back above the mid. There's my range high. I now want to see this structure hold, okay? I don't want to see it drift any lower. This is resistance here, where that blue line is. And this is the current local range low. This is the area that I want to do my business. I want to see acceptance back above here. It might push up, shallow pullback, and then go and take out these highs here, okay? Well, all this move down. There's not much resistance on the way up, so at least push back up into round about this zone here, okay? That's what I'd be thinking. If I see that, I'm comfortable in my spot position. We've reclaimed the level. If I'm right, I wouldn't want to see price now come all the way back down here again. Then I have to think about scrapping this idea. Why are we down here? Are we going to deviate this low and then get back inside? And I have to go again. Strike 2, okay? This is strike 1. This is strike 2. I have a 3 attempt rule on executing a trade. But notice how tight my stops are and why I can size up on the position. Because my invalidation is here. My entry was this one here. And then the swing fail of this, second entry here. And looking to add on the way up. There's the backtest of the previous SR. Okay, so again, you probably, if you did wait for the reclaim, you want to see price pushing away, and your trigger would be here. Your stop would have to be somewhere down here. Your target is obviously much higher. Okay, and that's all she wrote. There you go. Into that first objective to take some profit at this level here. Whatever happens after that, we'll have to wait and see. But that's how I've positioned. Upon taking a loss on Tower, my first initial trade that I had, only to get back inside, back into position from a lower price point and looking for continuation higher. I hope that helps. Range execution on the lower time frame using a 4-hour demand zone and looking to execute on a 5-minute chart, 1-minute chart, or time-based charts. Doesn't have to be non-time-based charts, I should say, on how to execute on the lower time frames. That's how I do it, essentially. That's not even looking at anything like funding, open interest, CVD, order flow, footprints, heat maps, just pure raw price action first, understand where I want to do business, then I can look at footprints, then I can look at heat maps, just to see limit order books, where is demand stacked in the books to give me confluence of where I can potentially step in and become a buyer. And the only way you can improve is by screen time, not by looking at open interest. Open interest ain't going to tell you shit about where to execute your trade. You can look at open interest once you've got a good grasp of price action, and you see this shit time and time and time again, okay? It's just, you're playing a game of probabilities, just like I did, okay? I took on the long, I thought I got away with it, and I got stopped out. Fine, I'll play it from lower down into a higher time frame contextual level of, guess what? SR. Okay, previous resistance, previous support, return resistance, acting as support again, pushing away. But the key, look, I'll be honest with you, the key to good trading is not being proficient at technical analysis or price action. Yes, it plays a big part. But I've come to discover over the last several years that the mindset plays a massive part in your decision making. Do you have the ability to pull the trigger when it matters? Are you oversizing? Are you undersizing? Are you now scared to take on a trade because your portfolio is down X%, or you've taken 3 losses in a row? Or are you now looking to revenge trade because you've taken 4 losses in a row, you had a 10k trading account, you're down to 6k, you've lost 4k on the 4k in a week on your 10k trading account. Fuck it, let me go all in on this next trade. I need to make my money back, and now you've blown out. This is you against yourself. No matter how good you are technically, no matter how good your technical proficiency is, that's just the honest truth. And anybody can be a great chartist. Anybody can show you before and after charts. Ultimately, how much did you execute on that trade, and did you stick to your trading plan? Anybody can draw an arrow from A to B, but you're lying to yourselves. Your P&L will tell you the truth of how you really are and how you perform, and that's all that matters. And don't look for the perfect entry. It's not, you're never going to get the perfect entry. You're never going to. I no longer have this entry technique where it's one size fits all. Like, that's it. If I'm going to long this, it's all one position. I scale in 1/3, 1/3, 1/3. I've just given an example of how I chip away out of position. I give myself room to breathe, because what I used to do in the past was, had price come to my level, I would have been the ideal candidate. That this would have been me. I'll literally show you what I would have done 3-4 years ago, right? This would have been me here. Price, okay, coming to this SR level. All right, comes here, tests it. All right, I'm going to step in here. Oh, fuck, I'm offside. I'm going to cut it. It does that. I lacked the balls to go back in again. Whereas now, I'm like, okay, fine. 1/3 here, swing fill, get back above. It could go low down, I'll have to hit the loss, but I've only got 2/3 position size. If it shows strength, then fine. I'll have the final third on the way up. I'm now looking to play the probability of being right. I want to see acceptance above here. Great. Acceptance. Let's go. This then has to be the deviation from a demand zone. We've filled in this inefficiency to the left. And it's your position size, which is my language, screwing with your head. Because when you're trying to take on too much size, you become very fidgety, you become very irrational, you're very emotional, you're looking to hesitate, you're going to cut the trade the minute you're offside by a few basis points because you're oversized. You're not giving the trade the time it needs to breathe and develop. And equally, if you don't have enough size on, and price pushes away, right? I bet many of you have done this, because I used to do this as well. I've got some size on here. Price is up here. Oh, fuck it. Let me just whack in a really good size. This is going to go higher now. And before you know it, price comes back and you've puked your position because you're in a loss. When you had a very good trade entry here and a very good trade setup, what let you down was not your technical analysis. It was your mindset and your emotion. The fact that before you even executed the trade, you didn't even calculate what type of position size you're going to put on. You didn't calculate where your stop limit is. You didn't calculate how much you're willing to lose. I'm not making it up. I've been there. I've been through that journey, and I can tell you that there's a very good chance that many of you do that now. How many have you actually gone ahead before even executing a trade and written down, all right, if price comes to this level, I'm going to risk 2-3% of my capital. I'm going to look for this position size. This is going to be my notional value. If I get stopped out, I'm comfortable losing $500, $1,000, $2,000 on this trade, or $20. Have you gone through that thought process so that you have now accepted the fact that if you're wrong, this is how much you're willing to lose, and if you're wrong, fine, it's just part of the game. It's about keeping your losses under control, and when you win, you win with conviction, and you've won with some decent exposure or size on the trade that it's going to be worthwhile. Okay, you don't have to have a high win rate. A 33-40% win rate is more than good enough if you're phenomenal at managing your risk to the downside. If you keep your losses tight and small, you will eventually be profitable in the long term. The most difficult part about trading, like I said, is bringing the best version of yourself to that desk every single day with the same discipline, with the same level of planning and waiting for the trade to come to you. When you start making impulsive decision, unplanned decisions, that's where you're going to fuck up. You haven't even thought about where you're going to take profit. Or even if price doesn't get to your target, have you thought about the fact that, all right, if price falls short of my target, what's my next plan? Have you visualized what you're going to do if price does A, B, or C? You are playing a game of probabilities. But we'll touch upon that in December on the streams, and I'm going to walk through some of my trades, the thought process, the planning, the trade life cycle, from planning to execution to trade management, and then how I reset, what that means in terms of the trade checklist, what that means, how I journal my emotions, and how I remove some of the emotional aspects from my trading. Nowadays, I'm super calm at the desk when I'm looking to execute. It really doesn't faze me. When I've got a winning trade, I'm not euphoric. How often do you see me be euphoric? It's just part of the business. You become accustomed to it. You have to have that emotional discipline just to be level-headed at all times, okay? And don't let the ego kick in. Yes, we can all get carried away with shit posting. We can get carried away with trolling each other, but at the end of the day, even that becomes tiresome. And, you know, I used to do a lot of shit posting in 2022. It was a bear market. I wanted to prove a point, maybe more to myself than to others, and I kind of got carried away. And sometimes you have to take a step back and ask yourself, are you trading or is your ego trading for you? And the minute your ego starts taking over and you start making stupid bets with people publicly and you start calling others out for their mistakes, or you start gloating, well, you need to keep your ego in check. It's nice to celebrate your wins, but equally, remain humble about it, because the market will chew you up and spit you back out if you fuck up. So that's why I've always said I don't mind missing trades, but I don't want to be significantly losing in trades, because that's what hurts the most. If you miss a trade, don't worry. There's plenty of trades. Doesn't matter. There's always another trade. But losing trades and losing big, that's what's going to kill your account. All right. Okay. So I'm going to wrap it up there. Hopefully you found that educational more than anything. Let's have a quick look at what Bitcoin is doing. All right. Not too bad. It's still holding up. There's still a case that, you know, if you can't rule it out. I hope this trend continuation, but with FOMC, look, what if we do get a shallow pullback again? You know, what if it's just this, or what if it's just lower down here? Well, these are one of the two levels that I'm thinking about reactions, prices. And if we do get a shallow pullback, what does that mean for altcoins? Are we going to get another opportunity to long altcoins again upon a pullback? We'll have to wait and see. Okay. But again, when you look at certain altcoins that have been in ENA, look at that absolute belter of a daily candle. Literally has wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15 days of selling in one candle. That is what you want to see in a bull market. These are signs, the early signs of a bull market. Okay. This is very, very encouraging. So if I'm seeing this on ENA and I'm seeing similar structures on, say, 7 days, nearly 6-7 days of price action wiped out, as long as this low holds, I'm looking for continuation higher. Nero did 50%, did it? I think Nero is one of the best coins you can trade in the market in terms of volatility. Fucking hell, look at that. That is phenomenal. That is flipping good. That is really good. That is very, very clean. Very clean price action. Yeah, that's good. That's very good. This would have been your previous range. This is such a classical bull pattern. Like, in a bull market, you see this on altcoins. It's just beautiful to see. It really is. You're almost anticipating the deviation. And then what you can do is, when you have this, like when you have this, this is a 4-hour chart. When you see consolidation like this for several hours, right, you can get ahead of yourself and start mapping out a range like this. Price comes down, bounces, there's your low, there's your high. This then becomes your internal range. That's a failure pattern, swing fail of this. That could have been your trigger here with the stop at the lows. And then what gives you confirmation is acceptance above here. There's your mid-range. Sorry. There's your mid-range, okay? So the minute you see a swing fail, gets back above, you can execute, stop at the lows. You want to see the mid-level hold. You don't mind price coming back in. 1, 2, triple tap, continuation higher. Shoulder, head, shoulder on a lower time frame. Lovely, lovely price action structure. Look at that. It doesn't fuck around. Straight back to the highs. That's going to rattle this. And then it could potentially go into new all-time highs. Tier, all right, you know what? Fuck it. We'll stay on stream a few more charts. Let's do it. Tier, I'm in tier. I talked about it. Oh, wow, that's gone up a bit. I think I tweeted that I'm back into tier at 475. Again, look at this from a structural point of view. I couldn't ask for a better structure, especially from an entry point of view. Base, 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 base. Several months. Probability. Rattle these highs and then go on higher into here. That's all I'm looking for. I'm happy. If I'm wrong on this, I would take this trade 10 times out of 10. Okay? I would happily take this type of structure, this type of trade over and over again because of the high probability and the win rate on offer. So my current entry, I think, is around about 460s. The low was just at $4 or $3.80. I'm in at 460. I'm looking for 12, if I'm honest with you. First objective 7s or 8s, but ideally, I mean, when you look at this inefficiency on the downside, and this is a base break above here, this is where I'll start leverage long into this level here. Quick, fast move into here with my spot position, and I'll close out both trades into that mid-level. Could it go higher? Yep. If it goes higher, then guess what? Clean canvas. I'm looking to trade this level here. One level at a time. Okay, the market isn't guaranteed. The market doesn't owe me anything. It could hit my objective, right, of here. But am I going to get greedy? And then before I know it, price is all the way back down here. And then it's going to be shit. I should have just taken profit. Too late. You could have taken profit here. You get a pullback. Price pushes back above. Now you can get back in again with your stop below here. What difference does it make? You're only sacrificing this much of a gain. At least you've locked in your profits. You're now playing the probability of being right, that if there is trend continuation, hop back in, take profit. That's just personally how I like to keep compounding my account and keep growing the account. Okay. What else am I looking at? Vanry, because somebody keeps asking for Vanry. I'll be honest, I've still got a spot bag from 2 cents for all the way from back in December. I did sell some partials, but I still got a fairly decent amount. I think I'm looking for at least 24, 25 cents. OP is another one that I don't have that I'm thinking about. Oh, look at that. That's really coming up nicely. In terms of market cycles, I'm really bummed up today, man. You know, Touchwood, I've been really been great on the health front. Last year I really suffered a lot, and today's my first bloody well, this week was the first time I've fallen ill since February, so I've had a good run. But again, market cycles, right? Base like structures, trend continuation up. This is what I want to play on the perp side. This is what I want to play short in the market. I'm not really too fussed about trading the distributive range. It's very choppy. If I am, it's trading the extremes, okay? Same again, extremes. This is for perps where I'm looking to play futures. If you're not comfortable playing futures, you don't have to. I don't recommend you do. If you're in spot from low down, just know where you need to get out of the market, okay? You don't have to be like me. It took me years to get to the level that I'm at, and I've blown plenty of accounts in my early days, so it's not easy, okay? Same again, base like structure. Is this going to be the push up now into a trending market, at least into $2.93 from 150? That's a probable 100% gain from current valuation. So again, with some sensible spot position and some patience, this could be your mid of this range here. You can start scaling in, or well, I certainly will look to scaling, and you're looking for the breakout of the range into T1. Take profit. If it shows strength, you get a pullback, continuation. That's the reason to get back in. Look to play the second half of the range, okay? Stop at the lows, execution, trade target, done. Yeah, lemon and ginger is gonna have to be the one, isn't it? Kind of good, really. I didn't want to fall ill at this point, but it is what it is. We get on with it. It's only a shitty little cold. What else? What else? OP, Tia, Say, Sui, W, ENA. We've looked at Nero. We've looked at ETH. We've looked at BTC. We've looked at Total 2, Total 3. PYR, because somebody keeps asking. Gaming, yeah, look. I mean, it's simple, really. If gaming catches a bid, then PYR will catch a bid. But until then, I don't see any strength. Kai, yeah, let's look at Kai. I mean, I have a bag of Kai. I bought when Charlie tweeted down here. Looks good. Looks very, very good. Base-like structure. Bottom of the range stuff. Looking for the mid. $1 and then potentially $2. But yeah, looks good. Looks good. Jupiter, yep. I'm still in my Jupiter position. I think I shared it on stream, didn't I? Was it down here or somewhere over here when I shared it? Again, look at this. Remember when we talked about Jupiter being very familiar in structure with WIF? It reminds me of where WIF was several months ago. So my expectation for this, look, there's your low. There's your higher low. Higher high, relevant to this. Higher low. Higher high. Higher low. Respect to the October monthly open. You want to see continuation higher. And in fact, that reminds me. If you go to XO trading levels, don't forget to map out the latest monthly open levels, which is the November monthly open. If we are bullish, we should have seen price trading below the November monthly open. And now you want to start seeing price push back above the November monthly open, okay? On Jupiter, beautiful price action. November monthly open sells off into the October monthly open. Straight back above it. This looks like trend continuation higher. If Bitcoin pulls back, mark this level out. You might get this, or it might just go a little bit deeper. Back above. There's your trigger to go along into that 130 level. Okay? From 95, $1. That's what I'd be looking at. There was Gito as well. I think that was a good setup. That's doing really well. Okay? Beautiful, beautiful setup. Lovely setup. Really is. I talked about the fact that be on the watch out for a pullback into this zone here. This is where you want to buy. I think we take out this. We're above the both November and October monthly opens here, and the September monthly open. So very, very good price action within this range. I think crack this range, this takes off to here, and then eventually to the highs. That's what I'd be looking at. We'll talk about this once we clear this, but from now it's from A to B. That's it. Gito, Jupiter, what else is there? Pith. Nice. Again, base in structure. Above the monthly open. First objective for me was 50 cents. And then we look at 70. Lovely, lovely structures. Really is. Really excited to see these structures. I just pray that they don't collapse or roll over. And I think if they were going to fail, they should have failed by now when Bitcoin was breaking down, right? But these are very, very encouraging. AI memes. What's a good AI meme? Yeah, I'm pretty bunged up, guys. I'm gonna wrap it up. I'm really struggling to talk at this point. Sounds like I've got a bloody peg on my nose. Can't even bloody breathe. So I think we'll wrap it up. PAL, yeah, PAL, that's one I've been partnered with since last year. But PAL looks good to me. I still hold a fairly decent position in PAL. I'm looking for 50, 60 cents at least. Then we'll talk about higher prices. There's a chart, isn't there, that I've missed off today, which is ETH BTC. My question on ETH BTC is this, and I don't know the answer. I don't know the answer to this. The question I'm asking is this, and I hope somebody can help me here. Is this the base for ETH BTC? And do we tag it? Do we touch it? And if Bitcoin is going to go higher and Bitcoin dominance rises, then that would give me reason to believe that this has one more push down into here. And at that point, there's got to be a reversal, surely. We've literally retraced the entirety of this 2021 inefficiency on the left-hand side. And you will see these structures on many, many charts on the lower time frame. And you get these violent reactions from this level here. So over the next 6 weeks, I think this will lead to an aggressive bounce, or I hope it does. I think with that, you will see an acceleration in altcoins, in Ethereum, if that happens. So I just don't know if Bitcoin is likely to go higher, then is ETH BTC, has it got one last leg lower before we see that reversal? Possibly, okay? When I look at the daily, I'm conflicted because we have two levels. On the daily, in fact, let me just look at the monthly. All right, so we're at the 0.786. That's on the monthly. We've got this monthly demand zone here. Right, let's just call that M. And we have the weekly. And this is where I'm struggling slightly because that's the monthly. The weekly block or the weekly demand zone is this here. This down candle. And we haven't quite tagged it just yet. But then when you go on the daily, you have two zones here. You have this zone here, and then you've got this cluster over here. So the question is, which one of these two is likely to give a reaction? And I honestly couldn't tell you. I really don't know. But if Bitcoin is to go higher significantly, then does that mean ETH BTC drops one leg down and then we get the reaction back up? You look at the RSI on Ethereum, ETH BTC. You've got a case for a very subtle, I don't know whether you can call this a bullish divergence. Possibly. When you look at the stock RSI on the weekly, it's at the lows. You've got the RSI at the lows. You've got the MACD needs a bit more work. Awesome oscillator needs a bit more work. So are we going to see a reversal in the next several weeks? I don't know. I mean, I'd like to think so. Not a case of I don't know. I think there's a decent probability that we will. It's just a question of how aggressive is Bitcoin going to be over the coming weeks, if it is going to go higher. Okay, so, and I think this will be very bullish for the overall alt market, because if you consider where Bitcoin is, right? Bitcoin is at all-time highs, right? But yet, Total 3 is nowhere near its highs, and neither is Total 2. But I really like what I see. I really like what I see on Total 2. and total 3. So it's looking good. It's looking very, very encouraging. And if there is, for whatever reason, one more pullback for whatever reason, then I'd be looking for something like this. But maybe this is enough where we get the trajectory higher. I think we are trading above the bands. That's on the weekly. This is very, very encouraging. So recall what I said at the start of the stream with regards to Bitcoin. Look at the wicks here. And then look at the bands. We're back above the bands. The minute this flips green, this should take off back to the highs. Okay, the momentum will be there. And you can front run that cascade of the bull signal if you just drop down to the 5-day chart. When you look at the 5-day, it's compressing. So on the 3-day, I wonder if it's already crossed on the 3-day. Yeah, it has. Yeah. Okay. Looks good. Very encouraging. Very, very encouraging. All right, folks, that's it. I'm going to leave it at that today. I hope you've enjoyed the stream. Thank you for tuning in. And I wish you all a prosperous month ahead. Hopefully now that we've got the elections out of the way, we've just got FOMC tomorrow. There's the interest rate decision by Bank of England and the FOMC. And then hopefully after that, we're in the business end of this 2024 year. And hopefully we're going to see continuation higher. And I'll catch you on the next stream. Don't forget, next week as well, I've also got a stream special with TradingView and the OK Exchange partnership. So I will be streaming again next Wednesday with the TradingView team and the OKX Exchange partnership. I think my next stream is likely to be this Sunday evening. So I'll do a quick macro outlook on Sunday. And for those of you who have raised any questions with regards to joining up, just please leave a comment in the comment section after the video, and I'll have an answer for you on the next stream. All right, but take care. God bless. Thank you for tuning in, and have a really blessed, prosperous Q4, and let's all smash it. Take care. Bye-bye.